What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online, as usual. Today, I just want to talk a little bit about net operating income, what really should go into it and what shouldn't, why it matters, and how we use that, looking for things, and how some of the platforms for fractional real estate investing have kind of messed with that a little bit and makes it a little bit more difficult for people that are just used to talking about real estate in a certain way to understand what's going on their platform. And that specifically, that's Lofty, but I'm going to show you what Mogul's doing as well. Um, this came up. We were talking in one of the discords for one of Earl's properties, and he had put some numbers out, and he had just stuck the debt service up above the line in NOI. And I think that if he had not been overworked and had been thinking about it, he would have immediately realized that didn't go there. But he was hurrying and put it out there, and so I had mentioned it. Hey, let's move that below the line. Let's that way it doesn't mess with the cap rate, and that got me thinking like I think Earl is one of the brightest and most experienced investors on the platform. Certainly, as far as on Lofty, and as far as someone who's also active in the Discord and talking about this stuff a lot. And if he's making that kind of mistake, um, I'm sure that a lot of people are just not. I mean, and as soon as I mentioned it, he's like, "Oh yeah, you're right. This goes here." But I think that there's probably a lot of people that are thrown off by the math, especially because of how Lofty presents it. So I'm gonna get into. I found a good article from Hemlane. Seems a lot of the PMs now are using Hemlane on Lofty. I thought it's a good one to use their articles. They actually have. I found they have this Academy tab. Oh, where did it go? If you click on here, so it's like Hemlane Resources. They have just a ton of great articles. If you're new to real estate investing, I only checked out a few of them, but I had nothing to complain about any of them yet. So I think that's good. Their NOI one, lines up exactly with how I think about NOI and why it's important and whatnot. And so that's why I'm going to go through that one. Uh, but so what is when we look at the financials tab on Lofty, right? We get this what we actually get paid. They always call this rental yield, right? This is not NOI, and sometimes it should be, and sometimes it's not, right? But it is. It's easy to get that confused, and but so that's why I want to go through here. But rental yield is a term. The way they're using it, and actually, I found this article from Stessa, which is a somehow affiliated with Roofstock, and I actually think I see this in a lot of our forms. So in a lot of our transaction history. So I'm not sure if there's some connection there with Lofty using them for their accounting or whatnot. But anyway, I don't know if this is where this has come from, but I've mentioned this lots of times, but I've been in real estate investing for 20 years. I think I'm way overeducated in this space relative to the typical person. What they call gross rental yield is, I think, really the only way most people think about rental yield, right? And that is just taking your gross rent and comparing it to the cost of the property. What Lofty is calling rental yield on their platform, what they're paying out here, is what on this, in this article they're referring, because I looked it up because I was like, what are, is this even a legitimate use of rental yield? It's not something that I see. Nobody I've ever run into has paid out anything to investors and called it rental yield. So I was trying to figure out like where they came up with this. And if you look on, this was one of the first articles that came up, and they were like, yeah, this net rental yield, it's basically comparing your NOI, right? Because that's your net rental to the price of the property, or which is just your cap rate, right? And so that's why nobody says net rental yield, because the way they're saying that you calculate this is synonymous with your cap rate. So I don't really know why Lofty chose to use this rental yield. I don't know if it's because, I mean, my guess is it's just because they really had no sense of what real estate terms should be being used, or maybe they just got some bad advice. But like I said, like usually rental yield, most people in the industry, at least that I know, when they think of it, they're just talking about this, the gross rental yield, the total rents relative to the price of the property, not the NOI relative to, because that's what everybody calls a cap rate. Anyway, that's what we see here, right? Is they're really just calculating, and then most of the time too, it's not even NOI, it's really cash flow. So if there are, well, I guess on ones where we're not paying any debt service, it is really NOI. But even the properties that have debt but aren't having not a mortgage but have other debt, that's not an operating expense typically, and so it's should be below the line as well. But so what am I talking about? You see me put these together all the time. This is just the one I did for yesterday's video. Your net operating income. It's just important to know what should go into it and what shouldn't. And so, they have this, it's your potential rental income minus your vacancy and credit loss. I always call this vacancy collection loss. When potential rental income, I'm usually calling that gross rent, which is short for, which really, the way I learned it is gross potential rent, but potential rental income, same general idea. They subtract a vacancy and credit loss. I always call this vacancy and collection loss. And then they get to an effective rental income, and I'm usually just calling this net rent. But I mean, in general, this is, I've seen this one too, right? Like if they were using these terms on here, I would think that it made perfect sense as well. Um, they're not. But so when you're doing that, just your potential rent, you've got your effective rental income, and then any other income, which is very doesn't come up very often on Lofty, so I almost never include it. But in larger multifamilies, this might be like, if you have a coin operated laundry facility, or if you have extra storage spaces you're charging to use, or there's any number of things. Sometimes you'll charge for the Wi-Fi and stuff. If you're an apartment building, you might get some additional income from that. But whatever it is, you'd add that there, and so then you'd have that's your gross operating income. Usually, I don't need to put that in because our net rent is where we're at. But then we go into our operating expenses. And so this is like, the property taxes, the management fees, repairs and maintenance, but not capital expenditures. And I'm going to talk about that a little bit more. Um, our professional services fees that are directly related to the operating of the property. Like it'd be good to actually, if this is a new topic for you, you're not really used to seeing this, to just open this article and like read through it and make sure you get it. Because I'm just trying to, go over this a little bit and then compare it to what we're looking at here. Um, and so then we get our net operating income, right? Like those expenses. But so what didn't we include in there? We didn't include debt service. So, any mortgage interest expense, any other sort of debt that we're paying. And you might think, well, wait a minute, we incurred this debt, operating the property. Like, for example, all the debt that we have from the universal lending DAO. But that is that's a financing transaction. It is not, whatever the expenses were that incurred that debt should come out of our NOI, but it doesn't it's the interest on that is a separate financing transaction, because we could have just paid cash, right? And so that is a below the line item. And then so you'll notice, like when we talk about this, if we're paying back the lending DAO or anything, it comes out of our rental yield. So I mean that just breaks the idea that this rental yield is the same thing as our cap rate, right? Um, so I think it's one of the reasons it's hard to talk about their finances very well is because they've just kind of decided to do their own thing and not set this up, with a full, okay, this is your NOI, this is your below the line, this is, not setting it up that way. And so, okay, so you have your debt service, you have tenant improvements. This is really a commercial real estate thing. Tenant improvements is like, if you have a new restaurant moving into your commercial property, you might pay to, you'll give them a certain amount of money as an allowance to revamp the whole space and so that's a capital, item. Well, it's a tenant improvement. It's not necessarily even capital, but then your capital expend. So it's just not really applicable to what we're talking about on Lofty most of the time. Maybe we'll get some commercial properties on there and we'll do it, but um, then you get your capex, and so this is stuff like replacing your roof, replacing your, um, things that you're doing like major replacements, or also capital improvements could be like building an addition or something like that. but it is not your general repairs and maintenance. And so we don't do a good job when talking about lofty properties in separating those two things out because, in general, our capex, well, part of the reason is we have this operating reserve, right, which is different from normally, you pay for repairs and maintenance out of your operations, but you have a separate capex reserve. And so a lot of times in my head, our operating reserve is really supposed to be being used for capital expenditures because typically reserves I think of as capex reserves. It's not how it's set up, although some of the co-owners seem to think that that's the only thing they should be using it on. So it's I don't know. I don't know if we have maybe somewhere on their site there's some documentation on what it should cover and what it shouldn't. I'm actually not sure. If you're familiar with that and their policy on it, let me know. It does just seem like whatever we vote for to do with that is what happens. And then depreciation and income taxes and that those sorts of things. Those are again below the line items, right? And so why do we care, right? Why do we not include that in our NOI? If, for example, the debt service and the capital expenditures, especially on Lofty, it's going to affect what we get paid each month. And then again, I'll just show you how Mogul sets it up. They just have their gross rental income, and this is the way they present it to us in our, when we get our monthly dividends, which come out tomorrow. I've noticed some of them have hit my account already, but not 100% of them. So I'm going to do an update tomorrow, hopefully with, how my portfolio is doing. But so far, the ones that have been updated look good. But yeah, so they just have gross rental income, operating expenses. You can't actually open this and see everything, but then they put property taxes as a separate line item. It is really an operating expense, but it doesn't really matter. But then okay, then they get us down to this NOI, and then they take out the debt service, and then they tell us what our rental income payout is going to be. And this makes a lot more sense, right? Like they're telling us they're actually giving us a real NOI number, and then they're showing us what else is happening to get to this rental income payout. And I think this is a perfectly reasonable thing to call this, because it's not necessarily going to be our cash flow all the time. Because sometimes I think they'll tap into reserves if they're over reserved and to sort of smooth income. They made some indication that they might do that in one video or whatnot. But so when I look at this makes a whole lot more sense to me. We're just not presented it in the same way. Although here, at least I have more details. But I'd like them to then, okay, group these as your operating expenses and then have another, have your NOI and then show any other cash, that's moving around, which might be like cash added in that we're taking out of the reserve or whatever it is that changes the cash flow amount, right? And if you're really not familiar with accounting, like normally, and this is kind of plays into what we're doing here, normally you have like four general accounting statements, right? You have your income statement, and that usually you have your income statement, you have your statement of cash flows, and then you have I said four, but I really income statement, balance sheet, statement of cash flows. Um, Maybe I'm just blanking on the fourth one, or maybe it's really just those three. But really, I'm just talking about the income side right now. And so this is basically the difference between, what your income statement looks like and what your cash flow statement looks like. It's not always the same thing, right? Like our income, as far as like and even for individuals, it's even a little bit different because sometimes even like what our GAAP income statement looks like, and you're not doing that if you're an individual, but what might go into that also doesn't look like what our income tax calculation looks like. So there's a number of different ways that we have to look at income, but it's not the same as cash flow. And one of the big differences, excuse me, is always debt service and debt itself, right? Like if we take a loan out and get a big lump sum of cash, that increases that's cash that we're moving, but it's not income because we don't pay taxes on that debt. Here in the US, at least typically, not giving you tax advice. Which reminds me, please like and subscribe. In the description to this video, I have links to all the platforms I'm currently investing in fractional real estate online. Please do your own due diligence on all those platforms and any of the properties that you see me mention. Just because I'm buying them or don't doesn't mean that's the right thing for you. Just because I'm showing you the way that I look at these numbers and the way that they make sense to me, it doesn't mean that that's the right answer for you, right? Like you want to really dig into each one of these, understand what's going on your own, and do your own due diligence or hire a professional to advise you on that stuff. I'm not trying to give you advice there. Also, in the description of this video, I have a link set up for it's an invite link to the Fractional Real Estate Investors Discord channel that I have set up where we talk about all different platforms and just investing in general. Feel free to join that. And I've had a whole bunch of people join lately, and a lot of you are just lurking and quiet. You're perfectly welcome to do that, but feel free to jump in, start discussions, ask questions, give answers. It doesn't matter that we've never heard from you before. If you want to jump in and if you've got some insight on something, please feel free to do that. All right. So back to here. So why does this matter, right? Why does it matter what our NOI, what we call it, right? Is it NOI or is it something else? Well, it's the way that we make an apples to apples comparison across properties, right? If we are trying to compare two properties, and one of the main ways that we do that when it's income property is through the cap rate. And the only way you can calculate a cap rate, which is, you're comparing your purchase price to the net operating income, is to be able to know what that net operating income is, right? And so if I'm throwing all this stuff into that calculation that I shouldn't be, well, then I can't very easily compare that property to the next property. That's the biggest reason. I think they might have mentioned another one. Um, yeah, so it's an easy way to compare them. It gives you, just, oh, the other thing is you can use it, and lenders always want to know your NOI because you can use it to see like, okay, this is the income that I have to cover debt service if I'm going to get a loan, right? And so that's what lenders are always going to look at your NOI, um, in order to calculate your debt service coverage ratio. So that's why it's important there. So if you're not calculating your NOI property or properly, then it makes it more difficult to compare across properties and also to talk to lenders and figure out what you can borrow and whatnot. Um, one of the things, and they have these cons set up, and I think these make a lot of sense, is it's something that sellers can easily manipulate by like pulling some things below the line, like calling something a capital expense when it really should be a repairs and maintenance expense. And then what else? Underestimating potential rental income. Yeah, I mean, you do see that a little bit too, like when they're, you'll see, actually, we saw this, with brownfields and in the appraisal, right? They were like, okay, well, this is the actual rental, but this is the potential rental. And then they use that potential rental, to then go and calculate, what this property is going to operate at when it's stabilized. And then, well, that just hasn't materialized, right? Um, so that's why that's important, for those things. And I think, I mean, it is one of the things I wish Lofty would just get on board with, just really understanding how the real estate world works first, how real estate investors think about things and talk about things, and then present their data in that way, instead of like sort of just, I mean, they really do just do their own thing, right? Like that's why I've had a couple conversations with investors recently that have come to this platform and they're like, what is this, why are they paying out the rental yield? What about your expenses? Like, oh, no. And so I had never even heard of this net rental yield. Like this is just not a common, um, I mean, I don't know. I found a couple places mentioning it, but it's not the, at least the traditional or standard way anybody that I know talks about it. Because this, again, if you look at this is exactly just the same thing as the cap rate. It's your NOI divided by your property value. That's a cap rate. So, I don't know. I mean, I guess they're doing it as opposed to, but like I said, I mean, so normally people when they hear rental yield, they think gross rental yield, and so when an investor gets here and they're like, I'm getting paid based on that, that doesn't make a ton of sense. Um, I don't know. So anyway, that's what I want to make sure when I'm doing these things and I'm calculating this, like, and I'm like, okay, this is the way I'm looking at this versus what they're doing here. I just wanted to make sure that it was clear, like, why I'm doing that. I'm not just like making up ways to look at properties, right? Like, this is not something This is stuff that I learned in my real estate finance program. It's stuff that I've used across, a number of different jobs, working in, commercial real estate, working for large financial institutions. Like I said, I mean, I'm using slightly different terms than what they use here, but I have them, right? I mean, gross potential rent versus potential rental income, or like I said, I mean, a lot of times I just call it gross rent. But yeah, having a vacancy and collection loss or vacancy and credit loss, getting to like really just how you get to NOI matters, because it is going to affect the way, if we just sort of, if we don't have a standard, um, and if all the platforms don't just use the standard that the real estate world has already established, well, then you can see why it would be easy to think a deal, it'd be hard to compare a deal on Lofty to a deal on Mogul, right? Like one of the things that I've mentioned quite a few times in other videos is, well, on Mogul, when I look at, and I don't have them in here, the cap rates are in their analysis tab, I think. But like when I look at their actual cap rates, um, yeah, I shouldn't be doing this because I'm going to mess up my screen recorder. Let's see. Do we do? I think we do. NOI. Actually, I guess they don't really even do the cap rate on here. They just go to our unlevered cash on cash yield, which is, yeah, actually though this is it's not exactly a cap rate either. So I guess I'd like them to just throw a cap rate in here for us, right? Am I just missing it? Yeah, I mean it'd be helpful, right? So then you could easily, I mean, um, their levered cash on cash yield and unlevered cash on cash yield. I think both of those, those are both terms that I'm used to seeing, and I think it's why, because I'm perfectly happy seeing that, it didn't even occur to me that, like, well, we're not really getting a cap rate. And it makes some sense that they do this because they're throwing in, so when they're doing their cash on cash, they have these very large reserves that they're using, right? And so, they're looking at the total cash that's being invested. And so it makes sense, right? It makes that number make more sense in the context of the investment that they're doing. But yeah, it'd be great if every single one of these platforms calculated just a cap rate for us, But I mean, like I can do it pretty easily because I'm given a real NOI on here, right? And so if I'm looking at the NOI and then I look at the purchase price, I can figure my cap rate. Uh, I'm never actually given an NOI, right? Like and they'll be like, well, your monthly cash flow, or your annual, they'll annualize it. But it's like, okay, that is not necessarily an NOI because all the things that we just said, there might be other things built into it and not. So I guess that'd be something like, that's why I'd like to see all the platforms use, standard real estate terms. And like, again, that's why, even though Mogul didn't explicitly give me a cap rate, I can very easily calculate one from what they gave me because I have a real NOI, right? Which on Lofty, there's just no easy way to do that. And so it makes it so when I am doing math and comparing across platforms, it's not easy to compare one deal to the next. And that has been a big part of the frustration. And I think so. I think that the more, again, the reason I'm doing these videos in general is so that our community, the fractional real estate investors in general, we can get together. We can sort of demand in the industry that there become certain standards that make it easier for us to make money, right? Like I don't want to have to do all sorts of financial gymnastics to get from to compare a deal on one platform to the next. Now, one of the things for all of Lofty's levered properties that have, the debt being paid for outside of the structure. Well, yeah, it's a weird structure and it's problematic. I think we're going to see less and less of that going forward. Um, Although the most recent deal they brought to the platform is still doing that, but I think over time investors are just going to stop being okay seeing that, right? And they're going to want to see these deals set up the way that real estate deals traditionally have been, because it doesn't, It's not sort of hiding or offloading this risk or having this, giving us a better yield, but with a sort of hidden risk that I think that is finally becoming apparent to more people exists in that structure. Um, and so I don't know. I think the more that we can look across platforms, and even like when I'm looking at deals in real life, I'm doing the same sort of math when I'm looking at my real life deals. If I can't just, not being able to just compare those across all those, I think is problematic, and that's why, hopefully this is helpful. Like I said, I mean, this is not the only place you'll find this. I think if you just Google, calculating net operating income for real estate investing, you'll end up with a whole bunch of things that might use a few different terms, but it's all going to look like this, right? None of them are going to have debt service above the line. None of them are going to have your depreciation or um, your income taxes. Like there is a standard in the industry that's just widely accepted, even if the terms might change a little bit. And so, being able to have numbers that are presented in that way repeatedly across platforms, I mean, it seems like it should be a no-brainer. And it's something that us as a community of investors, I think we should really push for and ask for as far as um, whenever if we're going to use a site, right? I think we should always try to make sure that it is set up in a way that's useful to all of us. So anyway, that's all I have to say about that. Um, I'm curious if this is news to anybody, right? Like if this is something that you're used to doing, if it's or if I mean, I know a lot of the people that I've talked to, if they came from the crypto world or the stock market world, Lofty's the first experience of real estate investing that they have. And, so they might not even know that, like, that Lofty's just kind of making stuff up as they go along as far as the way they present certain things. Um, so I don't know. So I just want to make sure that that's clear. Um, but yeah, I think that that's going to be it. So there's going to be some videos that pop up, and you're supposed to click on one of those and then watch another video from me because that's what YouTubers do. They tell you to click on those. So do that. Yeah, I'm a YouTuber.